Welcome to the Stupid Agent Man podcast, a production of StupidAgentMan.com. We're asking the stupid questions of the life, annuity, and long-term care business so you don't have to. This podcast episode is brought to you by NoProspecting.biz, where no prospecting means more time for business. Visit them on the web today at NoProspecting.biz. That's NoProspecting.biz.
Okay, welcome to the inaugural podcast of StupidAgentMan.com. I am the host and the Stupid Agent Man, and we have our first guest ever from Arthur J. Gallagher & Company, Rob Erzen. And what is your title there at Arthur J. Gallagher & Company?
I'm a vice president of the professional liability division.
And that would, I guess, include Errors and Ommissions, or E&O?
Yeah, in fact, our specialty is in the brokering and administering E&O programs for life insurance agents, life insurance companies, broker-dealers, registered reps.
Okay. Errors and Ommissions, what does that exactly mean?
Well, a lot of folks actually have the misconception that an error is, like in the registered rep arena, is just making an incorrect trade or incorrect transaction. Something as simple as when I'm buying 100 shares of IBM, I meant to buy 1,000. But actually, errors and omissions insurance covers a wide variety of negligent conduct that an agent or registered rep may engage in. For instance, it could be as simple as making a trade error or checking the wrong box on a variable annuity application. But it also covers any kind of lawsuit, complaint, demand for monetary damages from a customer or client involving any transaction that agent or rep engaged in. So it could be a client that may demand their rescission of their life insurance policy because the agent had made some misrepresentation and there was some miscommunication between what the customer thought they were buying and what the agent was selling them.
So if we could narrow it down just to the fixed world, the life insurance agent who's selling fixed life insurance, fixed annuities, maybe long-term care, what specifically do you see, I don't know, top 5 problems that tend to present themselves that E&O will kick in?
Not too much on the annuity side specifically, but on the fixed life side, I see that the general errors involving the application that it was filled out improperly. There was a missing of some sort of endorsement or a rider that the customer thought they got and didn't get. We have in the accident and health world, we have not submitting the medical application appropriately on time. We've got, in fact, one of the larger issues we've had in the last 5 or 6 years are in the life settlement world. Folks that are selling life insurance policies and then turning around and settling those same policies, and all of the issues that surround that involving getting premium financing for the life insurance policy. The premium financing may have fallen through. The customer now has to pay back the loan from the premium financing organization. The policy lapse, and they don't get to settle the policy. Those are probably the top 3 or 4 most recently.
And negligence or negligent conduct?
Well, the legal definition is you owe a duty to your customer to act in a professional, reasonable way, and then you breach that duty by an alleged wrongful act. And it, like I mentioned, it could be as simple as something where the application was filled out incorrectly, but also it could be a form of misrepresentation. That's a very common cause of action against agents where there's just a miscommunication. I thought I was going to be purchasing X, and I ultimately got Y. Or it could be that the product, a common cause of action is something was not suitable for me, that you should have known that what you sold me was not appropriate for my circumstances, and as a reasonable agent you should have known that, and therefore I want rescission of the policy, I want my money back. And one thing that agents really should know is that the policies, by and large, are duty to defend policies. So even if the true or untrue, these allegations that the agent committed negligence, it doesn't matter for the policy to defend the agent. So people can make up a lot of things in litigation, but agents should feel comforted that even if things are being made up, frivolous, untrue, the E&O policies by and large will still defend them.
Interesting. Yeah, we have a saying around here that perception is reality. And, we may have written a dissertation, and I've seen them in complaints where agents respond with a 12-page, highly detailed and really incredible other side of the story. But the perception was that they were negligent or they misled the client, and that's the reality that you have to deal with. So that's the reality that E&O is going to handle, right?
Yeah, and we have a very active plaintiffs bar. So plaintiffs' attorneys are scouring their client list for opportunities to file complaints. And also they're a very organized group. So if there is a particular area that's a problem for one plaintiff or an opportunity for one plaintiff's attorney in an area of negligent conduct of an agent, that information gets disseminated across a multitude of plaintiffs' lawyers. So they end up, they're a very aggressive group and can find pockets of opportunity all over the place.
Okay. And I have a specific question that I've never been clear on, and I want to ask it. Let me see if I can make sense of it. What if an agent has active E&O coverage, they write a piece of business, not only write it, but it's issued and paid and it's in force while they have coverage, and say maybe 18 months later or whenever down the road, the big complaint comes up, lawsuit, whatever it is, and for some reason that agent got stuck without coverage at the time of the complaint. What happens in that situation?
No, that's a great question. E&O policies, as opposed to, say, I'll use the example of an automobile insurance policy, those policies cover you at the time of the accident. So if you have a policy in force and you get into a car accident, that policy will pay for the damages and any injuries to any of the parties that were involved in the accident. E&O policies are not occurrence-based policies. They actually respond when the claim comes in. So using my automobile accident, that accident could have happened, say it happened today. The E&O policy that would pay on that accident would be the one where it could be 18 months from now, it could be 2 years from now, but it's when the plaintiff actually files a demand for money damages, whether that's a written complaint or litigation. So it's not when the negligent action took place, i.e. the accident, it's when the claim is filed. That's why they call these policies claims made. So that's that situation you're talking about where someone had sold a policy, maybe they did not keep their policy in force for some time after that transaction took place, and then 18 months later, if they don't have the insurance in place, it's not going to pay for that claim.
Okay, and then the reverse of that, what if for some reason they let their E&O lapse, didn't realize it, they wrote a piece of the transaction, negligence, everything took place without coverage, but then they have coverage at the time of the complaint?
Another good question. Any policy that they purchase, it's called the prior act's date. And what that means is that you have to maintain continuous coverage all the way back to the date of that wrongful act. So what that means is you have that transaction that took place, we'll just say it's January 1st, 2010. You had to have had a policy in force covering you for that during that time frame back in 2010. You bought another policy in 2011, renewed it. You renewed your policy in 2012, and here we are in 2013. You have a policy in force. Because you had that policy in force at the time of that wrongful act back in 2010, your policy in 2013 will cover that claim. But if you didn't have a policy in place at that time, or if you have a gap in coverage, you had a policy in place in 2010 when that act happened, but you didn't renew your policy in 2011. Then you renewed one again or got a new policy in 2012. Claim comes in 2013 because you had a gap in 2011. That activity in 2010 wouldn't be covered if a claim came in today. A lot of agents really don't understand that, and it's an important issue for folks to be aware of.
Okay, and I guess it doesn't matter if it was the coverage through another carrier in 2010, and then they're covered with Arthur J. Gallagher in 2012. As long as there was continuous coverage, that's irrelevant.
Yeah, basically, yeah, most life insurance policies or life insurance agent E&O policies cover prior acts. So from year to year, when you switch carriers, it would cover your prior acts. But it's something to look at if you're going to change carriers, is to ask that specific question. Okay. If I switch carriers, do I have prior acts, and how far does it go back? Most of them will say date of first continuous coverage is how far it will go back. So as long as you maintain that continuity, you can switch carriers from one to another. But it's a good question to ask if you're going to switch.
Rob, when an agent has that gap in coverage on E&O, from what we've discussed, that could be a real issue in some situations. Is there anything at all they can do? Coverage they can fill that gap somehow so they have continuous coverage?
That's a real tough problem, Jeb, and I'll tell you the best answer to that is to make sure that you maintain continuous coverage and don't have a gap, because what carriers are afraid of is that you go for a period of time, you're buying insurance, you stop buying insurance for a period of time for whatever reason, and most of the time it's just the agent has forgotten to renew, or maybe they left the business for a period of time and are coming back. But what the carriers are afraid of is that you stop buying the insurance and then all of a sudden you re-up and buy some today. And because these policies are claims made, you could report a claim immediately based upon something that maybe you thought was coming. And so they have a real sensitivity to that, and that's why it's so difficult to bridge those gaps. And most will not allow you to bridge that gap in coverage. So the best thing is to be on the front end of it and continually maintain your insurance. Even if you think you might be out of the business for a period of time, might come back, it doesn't hurt to maintain that insurance. And life agent E&O is still maintained at a relatively low level premium-wise. It may just make sense to keep it.
Now, that's something I haven't thought of. If somebody's out of the business, they're retiring, they very well need to think about continuing that coverage.
Yeah, there's a couple different options there if they're deciding to get out of the business. Some programs and policies will allow you to purchase what's conveniently called in the business tail. The technical term is extended reporting, and what that means is that you go to your current carrier and you say, I'd like to be able to purchase tail so that I may be not transacting business anymore, but I don't know if I'm going to get a claim in the next year or 2 years or 3 years out for business I placed prior to my retirement.
Tail, T-A-I-L?
Yeah. Yep.
Okay. Tail coverage.
Exactly. Extended reporting is what normally is called in the policy, but the common term is tail. And or in the alternative, if your carrier does not offer a tail option, it may just make sense for you to completely renew that policy for a few years after you retire, just in case something might come in that you didn't foresee. But you never know what can happen. It may just make sense to continue to maintain that policy in place.
Okay, and I think some agents are under the misconception that tail coverage is a solution for filling a gap in coverage, whether it was a 2-month period or whatever between E&O coverage. That's not the case, is it?
No, it really isn't. It's really designed, tail is really designed when you're, like for corporations that have insurance coverage, and they're going to wind down the corporation, they purchase tail because the corporation is not going to be around anymore, and they want to be able to protect the officers and directors and owners of that corporation in the future for something the corporation did prior to winding down. The same holds true for individuals. You just don't know what can happen in a year or two down the road. But the tail insurance is really designed to provide you that security if you're leaving the business or doing something else versus trying to close a gap.
Okay, and given the high risk of not having E&O coverage in force, is there a grace period or anything when somebody maybe didn't renew in time to prevent that from lapsing and not having coverage?
Yeah, that's a great question. And in our program, for instance, if say for instance you had maybe 15 days or 30 days where you had a policy in place, it expired, and you went, whoa, oh my goodness, I forgot to renew my E&O insurance. We have agents sign a warranty letter that says, I don't know of anything that's going on in these last 30 days that I didn't renew my insurance, and we'll close that short gap for them. But anything beyond 30, maybe 60 days, real tough for an insurance carrier to close that gap. So if you're out 6 months or you're out a year and didn't have insurance, you're probably going to have a real difficulty.
Warranty letter, okay, something else to be aware of. Okay.
Yeah.
All right, great.
Yeah.
What about ratings specifically on insurance companies and the AM Best rating? Are there certain rating or rated carriers that would not be covered in an E&O plan?
Yeah, the answer to that, E&O policies, by and large, don't want to be the reinsurer for defunct life insurance companies. And what that essentially means is that when an insurance company goes bankrupt, the people who are holding policies or annuities or any of their product are looking for somewhere to get their money back. And because they can't go after the life insurance company any longer, they'll seek to go after the insurance agents themselves. And so the issue there is that the agents may not have had anything to do with the fact that the life insurance company, and likely didn't have anything to do with the life insurance company going bankrupt, yet are being held responsible for selling an inappropriate or an unsuitable product. So to mitigate that, insurance companies will make concessions. They'll say, well, as long as it was A- or better or A or better at the time of sale, then if that company subsequently goes bankrupt, then you will still have coverage as an agent for your wrongful act. The problem with that is that most of those organizations aren't the ones that we have trouble with. It's actually more the folks that are either unrated, because, like for instance, in some of the regional PPOs or accident health insurance, some of those are not rated, or it's the ones that are in the B range that have the financial solvency issue. So agents should be aware, and it's important to understand that if a life insurance company does go insolvent, their E&O carrier may not respond to their claim. But that doesn't necessarily apply to anything else that a claim may allege. So
a B-rated company, there was an act of negligence, like we talked before, some of the examples, that would be coverage that under an E&O plan.
Well, if the company was insolvent, no, they would not cover that.
No, just they're still in business. Everything's going good. They're just a B-rated company, and there was an act of negligence.
That's what I was getting to just a second ago. Was just the insolvency is just one issue. If you sell that product, and we were just talking about just the kind of things that can happen, make a mistake, client alleges some sort of misrepresentation, you'll still have coverage for that B-rated company for any other what I would call sales practice type allegations or negligence. It's just the insolvency that would be the problem.
Okay, very clear and very important to know.
Yeah, it's important, and in some agents I think don't understand where the companies and why they do that. The truth is that they've been beaten up pretty badly by plaintiffs' counsels coming after agents for really that had nothing to do with their activity. And actually, many times agents get into those claims and get themselves released very quickly because of the fact they had nothing to do with it. Okay. The insolvency of the life insurance company.
Excellent. And I lied. I had one other quick question.
No problem.
And then I'm done. I promise. This is it. I skipped over it for some reason. What is the process for a claim, and who gets involved? So, say the agent receives a complaint, maybe even a letter from an attorney. The carrier receives that and is asking the agent for their side of the story based on this complaint. What happens? Who contacts you guys, the E&O carrier, to get involved, and what is the process? The basic process of that.
It's an excellent question, and I think agents should always err on the side of caution whenever they get something in writing from either a customer who is making some sort of allegations about some negligent conduct that the agent did in selling the product, or if they get a letter from the life insurance company where the customer complained directly to the life insurance company, and the life insurance company is coming to the agent and asking questions about the transaction. Immediately at that point, they should notify their insurance carrier. And the first place I would look to where to notify is a certificate of insurance. A certificate of insurance is going to say on there who the broker was for the policy. And in our case, we're the broker or placement agent for the E&O policy. And if you're looking for a quick way to get in touch with your carrier, the first thing I would look for is on that certificate of insurance and contact your broker. Otherwise, if you have a copy of the policy, or sometimes you have a copy of a handbook, or like on our website we have a frequently asked questions or what to do in the event of a claim, you can also go to those resources and find out what to do. And typically it is going to be a claim reporting form. In this day and age, everything is email instead of fax. Usually they do have fax numbers, or it's generally email. And what they'll ask you to do is to fill out some of the basics, who you are, your policy number, and then give some basic facts of what's happened, and then submit any documentation that you've received. So you'll submit that letter that you got from the client or from the life insurance company, and then that will go into their claim reporting system, and you'll receive a letter, usually in about a week. Now, if you do have an actual litigation pending, carriers are very sensitive to the time frames at which you have to respond, so they'll get in touch with you very quickly in the event you have that situation. But you got to give them a little bit of time to get the information, to issue you a letter saying we got it, and then they'll be in contact with you for next steps.
And if they felt like they needed legal representation, is that something the E&O carrier provides, or is that something they need to pursue on their own?
They ought not pursue it on their own. The E&O policies are very specific about not admitting liability. And so what you don't want to have happen is if indeed someone is looking for you to rectify a situation and pay them back or rescind a policy or something like that, you should not make statements against your interest because you have a E&O policy that's going to step in and potentially pay on your behalf. So you don't want to admit any liability. You want to contact the E&O carrier, and you don't want to hire your own counsel. That's really the job of the E&O carrier.
Okay.
And so I would recommend that you take your steps and actions at their direction at that point.
Well, that's important. Okay, you guys have a relationship with NALBA, National Association of Insurance Life Brokers Association. I slaughtered that. Let's try that again.
Independent Life Broker Agency.
There you go. I told you I was a stupid agent. So there's a discount there for agents that go using that link?
Yeah. If you're doing business with one of the member wholesalers, provided you enter the code, which is NAILBA05, you're able to get 10% off of your, approximately 10% off, depends on the state, but it's anywhere between 10 and 15% off of your E&O premium.
Okay.
So it's a nice discount that we offer to folks that do business with our member organization.
Okay, and where do they go on the web? It's pretty easy to get a quote and also pay with a credit card or whatever and online, correct?
Exactly. They can go online, and they can either go through the NAILBA website.
I have the agent, tell me if this is still accurate, agenteoprogram.com.
That's exactly the other way. That'll go directly to the website. They can get an instant indication of what it would cost. So it is state rated, so it will vary depending on where the agent is located. But they just got to tell us where they're located, tell them some brief information, some basic information of how much commission that they've earned, just to give a sense about where they're at in our rating model, and then it'll give them an instant indication of what they would have to pay. And if they decide that's a price that they're willing to pay and they like the coverage, they can go forward with an application, which is only about 2 pages long.
Okay, great. www.agenteoprogram.com. Okay, fantastic. Rob, I appreciate you taking the time to join us. Arthur J. Gallagher and Company, been around since, I believe, the 20s. Is that correct?
Yeah, Art's been gone for quite a while, but yeah, we're in our 80th year.
That's awesome.
So we've been around quite a while. Our division here in Southern California, we've been doing this for just about 30 years.
We appreciate you again taking the time to just to go through some really important stuff on E&O and a lot that I would say a lot of agents are unaware of. So thanks again, Rob. Have a great day. Thanks for joining us.
All right. Happy to do it, Jeff.
Bye-bye.
All right. Bye-bye.
This podcast is the property of CLA USA Inc. and is designed to provide introductory information in regard to the subject matter covered. It is intended for licensed insurance agents only and is not intended for use with the general public. Unauthorized use, copy, reproduction, transmission, distribution, and quotation of this podcast is strictly prohibited. This material is not intended to be used, nor can it be used by any taxpayer for the purpose of avoiding U.S. federal, state, or local tax penalties. This material is written to support the promotion or marketing of the transaction, transactions, or matters addressed by this material. CLA USA and their respective agents do not provide tax, accounting, or legal advice. Individuals should seek professional advice based on their particular circumstances from an independent tax advisor and/or attorney.